we shouldn't be building what we think should be built. We should be building what our audience wants.
Welcome to the Halftime Snacks. My name is Ronena Imbindo. This show explores the intersection between sports, business, and technology. Are you ready? Let's go! Today's episode is a very special one. It is a pleasure to introduce and welcome to the Halftime Snacks a former investment banker from Goldman Sachs, who's now the Chief Strategy and Financial Officer of Overtime. Overtime is one of the biggest sport media companies in the entire world, and their content has over 1 billion views each month. I can't wait to learn from him. So without further ado, Farzeen, Ghorashy.
Hey man, good to meet you.
Thank you for accepting my invitation. I'm sure me and the listeners will learn a lot about you. And I want to start off today's chat with your story, Farzeen. How is the transition from working in one of the biggest financial firms in the world as an investment banker to directing the finances of a global sports media company? How would you compare both roles?
For sure. I mean, working at Goldman was, the first experience out of college. So it was a good place to develop a lot of the professional skills that are expected of you in a boardroom. I went to an undergraduate business school in Canada. And so, you get to work on a lot of that stuff as well. But I think, being in an environment like that straight out of school was certainly helpful. Whether it's, how to speak or communicate, the level of rigor that you put into the work, making sure you're not making mistakes. Those are all kind of things that helped. And I think that, being able to adapt to, a number of different kind of crazy environments was super helpful. And that, now obviously it's, our company is, just over 100 people. So it's much smaller, but I think it's helped in understanding how to deal with very different situations and people. I think generally a lot of the skills that you get from more of a technical financial background help in this as well. Just being able to understand kind of all the different inputs into the business and the levers you have to create value. And being able to just draw on experiences of working with a lot of different clients and how they thought about their business, I'm able to apply to this job as well. And between Goldman and Overtime, I worked at Endeavor, which was, a large global talent agency, which owns a lot of assets in the sports and entertainment space. Being exposed to a lot of those businesses helped as well. Just having, a perspective that's, I guess, a little bit more unique coming into Overtime.
Were you always interested about sports and the industry, or was it something that came about and you just jumped into it?
I was always interested. I was more interested in playing sports when I was young, like most kids. And then when I injured my shoulder and I wasn't able to play tennis as much anymore, and I realized that I wasn't going to be an NBA player, I tried to figure out how I can mix my passion for sports with my interest in business. I always, whenever I was playing games, I liked those games that had some business aspect to it. So, in Canada, we're lucky there's a lot of undergraduate business programs. So I was able to go to one where you didn't have to pick, finance, marketing, or anything day one. You just got exposure to a lot of different things. And, I didn't really have a sense for what I was going to do coming out of school. And I quickly learned that finance was where there was a lot of, highly motivated, smart people were spending their time. And I was intrigued by it and thought it was an interesting means to developing skills in a fairly concentrated manner. And then leveraging that and trying to combine it with sports down the road would be interesting. I went to a sports conference and I realized that every other person there had the same idea I did, and I wasn't that smart. And so I realized that I had to, think about getting more, professional services experience before going to work for the NBA or a company like that. And so I was lucky that at Goldman, there's a group that does kind of sports media advisory work. And through some connections, I was able to meet people who worked in that group. And, I got super lucky in that I spent a couple of years there and got to work with the NBA and a lot of different clients. And eventually went to another client, which was WME at the time. And so, yeah, it was a mix of always wanting to do it, but also learning along the way that, there's certain steps I had to take before, just being fully immersed in sports on a day-to-day basis.
That's fascinating. I'm sure many of the listeners will identify with your story. because it's kind of an example of how is it possible to come into the industry. And taking into account your wide experience, knowledge of sports and finance, combining it also with the working projects and the numbers you're exposed to consistently, I'm really intrigued to ask you how valuable and how risky compared to regular asset classes such as stocks, bonds, real estate, is it to invest in sports and sports organizations?
I think so. One, sports investments aren't really accessible to the everyday investor. I think if you are someone who has the ability to go invest in a sports company, whether if they're raising money or if it's you're so rich that you can invest in a team, or there's some stocks that are publicly traded as well in the sports space. I think that it's just a different risk profile, right? You need to understand that the upside may be higher there, but the risk might be higher, and conversely, certain bonds, the same thing with bonds, right? If you're going to go and invest in AAA versus junk bonds, like there's a risk return profile there. And the same thing with sports assets. I think sports is a little bit different in that it's not so much about value as it is price. If you think of sports teams getting sold, like the revenue or EBITDA multiple or whatever it was sold is like, it's an indication of value, but it's also an indication of price. There's scarcity value in that there's only 30 NBA teams, right? And how often is a team going to go on sale? And so when it does, there's this supply demand dynamic which drives the price up, even though the value may not be there. And I think you need to understand like where we're at in that cycle and where that cycle is going to figure out if that's an investment that makes sense.
I'll keep that in mind, and that's really interesting how you mentioned it, Farzeen. And I want to switch over now to talk a little bit about overtime. What is the business model of overtime, and how well is it working? What are the chances you'll need to execute like a business model pivot within the next 3 years? What's your take about it?
Sure. So our model is primarily advertising based. If you think of, if you're familiar with Barstool Sports, for example, right? They are a company that has a large audience, and there are large brands like Coca-Cola and Pepsi and things like that who want to reach their audience, and so they'll spend money with them to go and reach that audience. And then also because so many people are hardcore Barstool fans, they'll go and buy their apparel and their merchandise. Our business is very similar in many ways. We're the largest sports media company on kind of digital. We just passed the NBA on TikTok, for example. And so we reach a lot of young people, and it's a very elusive audience. So brands like Nike and Gatorade and a lot of these companies want to be able to reach this young audience, and they can't do it on live television because these sports fans are not watching live television anymore. So this is kind of where they go and spend that money. We've put on live events before, so it's another form of advertising in a way. But similar to Barstool in many respects, like we have a very engaged, loyal brand. And so, when I walk around the streets of New York City with an overtime shirt, kids will do the O with their hands and be really excited. And they want to be able to wear that themselves and represent the brand themselves. And I think that's what differentiates us from a lot of other digital media companies. Like no one walks around with a BuzzFeed shirt or like a Vice Media shirt or anything like that. And I think that's the power of our community. And so our business model is like primarily advertising based, whether it's direct brand deals, whether it's like programmatic revenue, whether it's live events, and then, general apparel and being able to create merchandise from, our core IP. In terms of pivot, I think that, because of this audience that we have and the distribution power that we have and the brand, we're going to expand into, extensions of our business that, a company like ours would think about doing, whether it's like owning leagues, whether it's having our own subscription product, whether it's having our own app. We just released an app in the App Store, which is basically serving the Gen Z young millennial sports fan because there's nothing else in the market for that. And so really leveraging our core competencies to go and expand our business into things that really are products that, our audience will want to consume.
Wow, I find that super intriguing, and that's really worth looking into. And I'm curious to know, Farzeen, when a company is so big with such a massive following like yours, you mentioned that you're bigger than the NBA now on TikTok, and you have 4 million followers on Instagram, and you have so many, like such a massive following. What's the thought process of you and your teams to consistently deliver value to the consumers to keep growing? I mean, what are the most critical metrics you take into consideration for the financial strategy and the growth of the company?
I think the three that I would pick, I mean, there's a lot. I think the three that I would pick, though, one would be engagement rate. It's, you can post a lot of content, but if people aren't engaging with your content, it's only so valuable, right? So being able to show that, as a percentage compared to other people, how much are people liking, commenting, sharing? That's how you create community. You don't create community by passively watching videos, right? You create community by people wanting to interact with your content, share with their friends, comment, tag, things like that. So I think engagement rate is always the number one thing that we've looked at, and we still look at it today. And the fact that even after, when we were small, people were like, oh, it's easy to have high engagement. But then now we're bigger than everyone, and we still have the highest engagement rate. And I think that goes to show our understanding of our audience and our ability to create engaging content. The second one would be watch time. Everyone uses the billion views per month thing. I think watch time is a better representation of how much people are consuming your content. Someone could watch our YouTube video or a Snapchat video, but are they watching for 1 minute or are they watching for 10 minutes? So our watch time and the percentage of that watch time that comes from long form content is certainly something we take, a close look at on a continual basis. And the last one I'd say is it's more of a financial metric. It's the percentage of our inventory that we're selling to advertisers. And that's, meaningful in terms of how quickly are we able to convince brands that this is inventory that's worthwhile of their ad spend. And so, an increasing sell-through rate and our ability to sell a higher proportion of the content that we're creating to sponsors and things of that nature are critical as we think about how you manage growth in a high growth stage company.
Wow, that's fantastic, Farzeen. I appreciate that answer. And since we're running out of time, I'd love to ask you a more personal question, Farzeen. What is your Thielean secret? Meaning, what is one key belief held by you or by Overtime that is not widely shared by the industry, and what has made you believe in it?
I'd say it's actually two things. One is, for a long time, people said, you don't have an app and you're not valuable, right? And I think that, we have an app now, but it's not because we need it, right? It's because it's an interesting extension of our business, but we're always going to be where our audience is. And our audience is spending time on TikTok. They're spending time on Snapchat. And so our ability to build our brand on the backs of these social platforms, I think, was really huge. And people think, oh, now that we have an app, we're going to push all of our users there. And that's not the case. There may be some users that go there, but social media platforms will always be a key component of our distribution strategy because that's where people are spending a lot of their time. And I think that's where a lot of people have disagreed with us in the past and still don't quite understand. That's how, young people are consuming sports content. The second of which would be really understanding what your audience wants and building that for them and not, assuming what they want. And I think, we do a really good job of surveying our audience, talking to parents of the athletes we work with. We don't launch a business line or a product without really understanding what the pain points are and creating value for that consumer. One of the things you said was how do you, go and every single day go create value for your consumer? It's not really a guessing game. We understand what is bothering them, where the gaps are in their day-to-day consumption habits, and how can we serve that purpose as a brand that they love in other parts of their life.
Yeah, I feel like the way you described it lies perfectly into the definition of audience-first products, which basically value what the audience actually wants and not based on what sells the most. No, it's based on what brings value to the audience and to the actual consumer. And I loved how you said that for you, it's really important how much time they spend on the video. And I love that. That's super smart way of measuring your success.
Yeah, for sure. I mean, I think, if we built this company for what I or CEO or whatever wanted to consume, we would have built something similar to ESPN or one of our competitors that none of these young people love, right? And I think the whole point is that we shouldn't be building what we think should be built. We should be building what our audience wants. And, we think we're the best people to build that for them. And so, that's why we go into the the analytics, and we'll see like, oh, like minute 4, like for some reason people stopped watching. Like why? Like I could be like, well, I love that, but it doesn't matter what I want. It's what our consumer kind of consumption habit is, and like really understanding that over time, and how can you cater it to improve it and make sure that whatever you're delivering to them, whether it's, you know, a t-shirt, whether it's content, whatever it is exactly what they would expect and want, because, you know, that's not what other people are doing.
Totally, Farzeen. I think that's a great place to wrap today's conversation. I'm grateful for having the chance to speak to such an icon of the industry. I'd like to thank you for your time, for your insights, and for your kindness. I hope we get the chance to interact in person sometime soon. But for now, thank you for coming to the Halftime Snacks.
I appreciate it. Thank you, man.
Before you leave, I want to thank you for listening. To hear these or any other Halftime Snack, check out the full archive on my website, which you can find on the show notes. See you next week!